This is Pat Walker at Mission Winners. I'm making a video of the stocks in the top 10 groups. Now I'll clarify, this is the leading stocks in the top 10 groups. Stocks that have a decent relative strength rank and a decent accumulation distribution rank. It's very important. Stocks that are within 20% of 52-week highs, no low price stocks, stocks over $10 a share, stocks that trade more than 200,000 shares a day. And you can say, well, gosh, show everything. No, because then all of a sudden what happens is you fly out of control and you start looking at a bunch of junk. And you don't want to put junk in your portfolio. So you have to have some constraints. And we do. It's constraints that I've developed and used for over 30 years. And it works. It keeps me involved in quality stocks. Quality. I'm not going to look at $3 and $4 stocks. I want quality. And you should too. You're talking about your money. So I want to slide this into the window and just show you something. Here are the top 10 groups. Just show this to you. Auto manufacturing, solar energy, you can read it. Biotech, managed care. And again, when I run my screen to make this video, I have those constraints on there. Again, no low price stocks, stocks with an accumulation distribution of A, B, I even loosened it to C, stocks within 20% of 52-week highs, over the 50-day. We're looking for quality. You know, we're not bottom fishers. You want to buy strength. You know, I say this when I teach these things. Do you want to buy a stock that's going to hit highs? Look for stocks that are near highs. There you go. But always look for stocks that have a good basing pattern. So there's a mistake. There's a typo there, isn't there? Can you believe I'd make a typo? Here we go. In fact, I made 2 typos. Let's do this. Here we go. Look at that, the joys of modern technology. We'll get this right, I promise. It takes 2 L's in there, doesn't it? There we go. So here they are. You can take a picture of it if you want. What I'm going to do is slide this out of the way and we're going to look at the stocks. And now this is what's very interesting. Normally when I run this screen, I come up with between 15 to 20 stocks. The market has gotten hit hard, as you know. So here are the leading stocks in the leading groups. Stocks that fundamentally and technically still have something going for them. First stock on the list, Everbridge. Just to tell you about Everbridge, Everbridge has an earnings per share rank of 64, but it's got an accumulation distribution of A, composite rating of 99, relative strength of 97. Last quarter's earnings were up 156%. And sales were up 37. So you can see it's quality. It's quality. Looks fine. One thing I want to share with you. These are little telltale signs we look for. You could say, oh, that's a red bar. That's a bad bar. I'm going to enlarge this for you to help you. Look at the open, look at the low, look at the high, and look at the close. Even though it closed down versus the previous day's close, it closed in the top half of its range on a pickup in volume. It also gapped down from the day before, fell down to the 20-day, and closed again in the top half of it. So guess what they did? They didn't sell, they bought it. That's the kind of analysis that sets us apart, is looking at the bars, price and volume bars. But you can see, is there a setup here, folks? No, there's not. Here's the next stock on the list, EBS, Emergent Biosolutions. They are definitely be involved in areas that can be used in the biotech field. Now, I will share this with you. It does average daily volumes a little over 400,000 shares a day. You can look here and see it. That's one whale of a move. I'm sure they have something going on with COVID-19. All right? And that's good. That's good. Just always be careful with individual biotechnology. You can see here, I'll even take it down to 5 minutes. You can see that the range on some of these bars, it can catch you really fast, really fast. So I'm not saying don't buy it, but I'm just telling you to be aware of that. That I'm sure they're involved in something to do with coronavirus. If they get something, it'll be great. If somebody else gets something, the thing will drop like a rock. All right? And I'm not saying that's going to happen to this company. No way. I don't know the future. I'm just saying you always have to have a game plan on what's going on. So that's what it is. It does have an accumulation distribution of A+, which is good to see. Here's another one for you. Now, you can say, whoa, look at that. I'm putting this one on here for a lesson. They've got a tender offer. They're being bought, okay? They're being bought out. Whenever you see a chart that is super tight, this is a lesson for all of you. Whenever you see a chart that is trading unbelievably super tight, chances are they're being bought. That's my helpful hint for you for tonight. So here's the next stock on the list is Regeneron. Bigger biotechnology stocks, does over 1 million shares a day. It's got an earnings per share rank of 92. It's got a relative strength rank of 97, composite rating of 99. It's lifting up. You can see though, you got to be careful with these stocks. You got to be careful with all stocks. I mean, this stock right here closes at, we'll just round to the nearest dollar, okay? Closes at 486. The next day it opens at 444, drops all the way down to 426. That's a from here to here, that's 40 points. 40 points. Swings here. Now it reverses, it gaps up, it falls, and closes near the highs. Perhaps they have something involved with coronavirus. I'm not saying they do, okay? I don't know, and I'm not checking. And you can say, Patrick, why aren't you checking? Because I don't buy individual biotechnology stocks. I had a good buddy of mine years ago, got killed in a biotechnology stock, and he said it best, I'll never buy another one. And basically, for me and for the VIPs, the risk is too high. The risk is too high. I'm not saying something bad's going to happen to this company. No way. It's a great company. I'm just saying individual biotechnology can be tough. What could you do? An individual biotechnology ETF. There's nothing wrong with that. Just wanted to share that with you. Not trying to rant, just trying to help. Here's the next stock on the list. And folks, this is the thing that's interesting. I don't have many stocks on the list. Why? My constraints are not that tight, but it's just indicative of a crummy market. Stock's got an earnings per share rank of 91, composite rating of 98, relative strengths 95, leading to new high ground. But just ask yourself this question. Looking at this chart, would you see a chart pattern like this in any book saying, oh, this is what you want to look for. This is a company handle setup. You're going to see that? No. Why? It's loose. It's very, very loose in here. All right? And that's also indicative of the markets. So just be careful with it. Accumulation distribution C. Just be cognizant of what's going on. All right? And the last stock we have on our list, and this is in telecom cable, okay? And folks, again, I ran the screen. I didn't tweak it. It is what it is. If this is what it comes up with, this is what we got. The stock's got an earnings per share rank of 91 and a composite rating of 97. Relative strengths, 97. But again, this is telecom cable, okay? Looks decent, but it's loose. It's very loose at this point in time. So if you buy it, I'm going to give you a lesson here, okay? If you decide, let's suppose you decide to buy this Monday, taking out today's highs. That could be a trigger. What would be your uncle point? I'm not going to say stop, put a sell stop in. What would be a potential uncle point? Taking out Friday's lows. Friday's lows, 75.88. All right, let's just call it 76 bucks. The high here is 81.74. So I'm going to say you buy it for 82. You buy it a little bit over today's highs. You buy it at 82. Where would you consider selling it? Well, if it loses the lows, we'll call it just under 76, okay? 82 to 76 points. Are you willing to give it 6 points to prove you're wrong? 6 points to prove you're wrong. That's what you have to ask yourself. That is the stocks, the best stocks in the top 10 groups. And this is it. That's all. I run the same screen. It's the same screen I ran last week. No changes in it at all. The only thing that changed was the players and the market, which tells us one thing. And I'm going to do this for you too. put it in right here. I made a video for you of the ETFs also that I hope you get to look at. You know, it's lifting, and perhaps it'll keep lifting, but this is treacherous territory, all right? This is not clean and simple at all, all right? Gap down, gap down, gap down. Maybe it's going to gap up Monday. I don't know. But it's below the 8-day. It's below the 20-day. It's below the 200-day. It's below the falling 50-day. All I'm saying is this. I'm the eternal bull, okay? But just be disciplined in your entries. Don't get emotional. Don't chase. I just wanted to share that with you. Just things you pick up. You want to have a game plan. Always consider this. Please have a plan to buy, and if it doesn't work out, have a plan on where you are going to sell. And you need to have that plan laid out in your head before you need to do it. Have the plan. Anyway, I just wanted to share that with you. There's the leading groups and the leading stocks. It's pretty dang skinny, but it's understandable with a market like this. Anyway, thank you all very much, and I hope you're having a good weekend.